this video, we will go through the top 5 stocks for the month of March. The market is currently crazy about current events, but I have researched hundreds of different companies and this is my list of stocks that I think should be on your watch list. I advise you to watch the whole video until the end and see a complete analysis of all companies. We will go through the key financial reports and figures, recent news and why I expect their value to grow. If you're ready, like this video and let's get started. The first stock for today is the stock of the company we already talked about on this channel. It's an Intel company. Stock ticker is INTC. Intel is an American multinational technology company best known for its Intel processors. The current value of one Intel share is $48. Looking back over the last year, the lowest value of this stock was $43 and the highest was $69. When we look at the chart over the last year, we can see a constant decline in the price. What is interesting is that just last April the value of this share was the highest with a price of almost $70 per share. Since then the value has dropped by around 30%. Intel has a market cap of $190 billion and the PE ratio is 9.75, which means that they are not currently overestimated. This is a share that pays an annual dividend at a rate of 3.13%. Yahoo Finance has marked the current share price as the fair share price. They have a very good profit margin of 25% and return on equity of almost 23%. They have generated $79 billion in revenue in the last 12 months. When we look at the balance sheet, we can see that they currently have $28 billion in the account. When we look at the analysis of analysts from Top Ranks, we see that their conclusion and advice is the current hold if you have stock, and if you want to buy it, wait a little longer. The average projected value of analysts is around $54, which is around 15% more than the current share price. Intel's biggest competitor is AMD. Intel's biggest advantage over AMD is that all parts are made in-house, which means that when they apply for the same job, Intel can be present to sell its products at a lower price than AMD. Since we saw that Intel lost 30% of its value due to the bad financial reports in early January, their shares fell and therefore they are now considered a fair purchase price. Intel has also started building a new factory in Arizona in which it will invest around $20 billion. So in the long run, this stock will be good in everyone's portfolio and it's certainly a share that you should have on your watch list. The second stock we are talking about today is Expedia. Stock ticker, i.e. the mark on the stock exchange, is EXPE. Expedia is an American online travel company. It is known for its travel information and various tourist services. The current value of one share of Expedia is $176. When we look at the period from the previous year, we see that the minimum value of this stock is $136 and the maximum is $217. If we look at the chart of a year, we see that its value has jumped over the past few months. They have a market cap of $31 billion, a profit margin of 0.14% and a very low return on equity of 0.4%. They have generated revenue of $8.6 billion in the last 12 months and currently have around $4.5 billion in their account. When we look at the rating of the experts from Top Ranks, we see that their conclusion is moderate buy and their price target is $218. Expedia has recently released its financial reports for Q4 for 2021. The data was great. The company's revenue growth was almost 150% and all other items were in green. What's the biggest reason for such reports? Well, the easing of COVID measures and restrictions have allowed people to travel again, and that is why the company has achieved such a percentage increase in revenue compared to the previous year. Most of their income was in travel insurance, airline tickets and car rental. This is a long-term hold company which I think should definitely be on your watch list. The third company on the list is Visa. Stock ticker, i.e. the symbol on the stock exchange, is V. Visa is an American multinational financial company best known for its online transactions, credit and debit cards. The current value of one share of Visa is around $200. When we look at the period from the previous year, we see that the minimum value of this stock was $190 and the maximum $252. When we look at the graph of 1 year, we see very interesting oscillations in the price. They have a market cap of $470 billion and this company pays dividends of 0.72%. This is an extremely profitable company and its profit margin is currently over 50% and return on equity is almost 36%. Revenue in the last 12 months was 25 billion and they currently have around 16 billion in their account. When we look at the opinion of experts from Top ranks, we see that it's a strong buy and that the price target of analysts for the Visa stock is around $273, which is over 20% of the current value of the stock. This is one of the favorite companies among analysts. Visa is certainly one of the most famous financial companies and continues to be dominant in the market. Despite all these results, the company still has room for improvement. There is still space in markets such as Southeast Asia, Africa, the Middle East and other developing regions. Therefore, I personally believe that there is still room for growth and development because there are still countries in the world where the possibility of credit card payment is not developed. One of the recent interesting news is Visa's partnership with Pagaya. Pagaya is an AI company that detects credit risk. Rising interest rates and slower economic development will definitely slow down the growth and the development of the company, but it will definitely not decimate this corporation. This is why its recent financial reports are absolutely great, where they still report year-over-year revenue growth of almost 25%. This is a company that will surely continue to thrive and pay close attention to the stocks of this company. The next company we are talking about today is Ulta. The stock ticker is the same as the company name, ULTA. Ulta is an American beauty company known for the production of cosmetics, nail products, baths, and other beauty products. Currently, the price of one share of this company is around $366. When we look at the period from the previous year, we see that the minimum value of this stock was $297 and the maximum was $422. When we look at the 1 year chart, we see an overall increase in the value of this stock with recent corrections in early 2022. Ulta has a market cap of 20 billion, profit margin of 10%, return on equity of 45%, and revenue in the last year of $8 billion. They currently have around $600 million in their account. Analysts from Top ranks estimate this company as a moderate buy and forecast the value of one share of $456, which is around 25% more than the current value of the share. Ulta is another great example of a long-term company that is constantly evolving. Since its listing in 2007, the value of Ulta shares has increased by amazing 1009%. The most important factor in this progress is its product catalog. They are constantly upgrading and improving their product catalog to keep up with trends. One of the interesting recent news is that Rihanna's beauty product collection will be available at Ulta from March 6th. What is amazing about this company is that it reported year-over-year net income growth for amazing 3000%. Ulta is releasing a new financial report on March 10th, and given all that been said, it will be interesting to follow up on this information. That is why this is one of the stocks that must be found on everyone's watch list. The last stock for today is in fact Index. It's a Vanguard S&P 500 Growth Index Fund ETF shares. The stock ticker is VOOG. This index tracks all stocks in the growth section of the S&P 500 index. Currently the price of this index is around $258. When we look at the period from the previous year, we can see that the minimum value of this index was $219 and the maximum $306. We see that they have net assets of almost $8 billion. One of the most important indicators in the ETFs is the expense ratio, and it's 0.1% in this ETF, which is absolutely amazing. When we look at the graph in the last year, we see that the ETF grew and then got a 15% correction. With all indexes, when you look at its value from the moment they entered on the stock market, you will always see long-term growth, and that is why indexes are one of the safest long-term investments. Of course, the earnings are lower, but it's much safer compared to the individual shares. When we look at the structure of this index, we see that it's made up of around 12% of health companies, 15% of communication services, and almost 40% of tech companies, and so on. The return on investment for the past 3 years is 20%. If you love companies like Tesla, Microsoft, Facebook, and Amazon, then you will definitely love this ETF. I think VOOG is a great long-term investment, especially if you want to enter high-quality developing companies but with less risk. Speaking of risk, we all know that the stock market is a high-risk market. Also, a lot of people don't have the initial capital to start their investment journey, so the Freedom24 broker comes to our aid. If you sign up for the platform using the link in the description, you will have a chance to win free shares worth up to $1,000. You can sell and withdraw these shares or reinvest them in other shares, or simply decide to keep them for a longer period of time and wait for their value to jump. This broker also offers you a D savings account. It's a savings account to which you put money and you have 3% annual savings interest rate. If you decide to buy shares from this broker, you have 0% transaction fee for the first month of trading. You can buy all the mentioned stocks from today's video on the platform with this broker. The link is in the description of the video. That would be all for this amazing video. I hope you learned something new and useful and that you will further explore this investment opportunity. If you enjoyed the video, be sure to like it, subscribe to my YouTube channel and follow me on Instagram, because I will be more active there soon. I will leave you a playlist with other news when it comes to the stock market if you want to see another tutorial on this topic. Until the next video, new education and earnings online, big greetings from my YouTube channel. Cheers!